The $1,000,000 question I get asked every single day. You want to know what are the best stocks to buy now? Here are the top 5 S&P 500 stocks to buy right now, according to Seeking Alpha. It's early July, and right now the S&P 500 is almost 5,600. It's at 5,581. We'll also get CPI data on Thursday and hear commentary from Jerome Powell, and we'll get PPI on Friday. So inflation data is going to be very important, and we're also kicking off earnings season this week. So just as a quick primer, understand that the market could have a sell-off anytime. The S&P 500 is up almost 18% year to date. And the QQQ, the NASDAQ 100 ETF, it's almost at $500, up nearly 24% year to date. So without further ado, the number one stock on the list, this has the highest quant rating of all the stocks we're going to cover today, Super Micro. So as you probably know by now, Super Micro is a huge beneficiary from phase 1 of artificial intelligence, Gen AI. That's the infrastructure phase. So stocks like, of course, Nvidia, Broadcom, SMCI, and more. Now, it certainly doesn't hurt the fact that SMCI is partnered with Nvidia and actually do presentations with Jensen Huang. So obviously with Nvidia, you think of GPUs. SMCI, Super Micro, it's going to house those GPUs. And it is much more than just the rack itself, but that really is primarily the business. And so you can see large scale AI training, HCP AI, enterprise AI, visualization and design, and also something SMCI has been pushing recently, I've seen some marketing on, is Edge AI. Now, it's important to note that SMCI partners with NVIDIA, Intel, Broadcom, and AMD. In fact, the racks that SMCI builds, they're compatible not only with NVIDIA, but also with the new AMD chips, as well as Intel's. So it gives the customer a choice, and they're basically ready, plug and play out of the box. So optimized rack scale total solution. So 5,000 racks capacity per month expected the end of 2024. And 2,000 plus of these racks will be direct liquid cooled. And there is a big push here for energy efficiency, and SMCI does benefit from that. And they call themselves a one-stop shop. Server software management solutions drive optimization and higher infrastructure security. So let's look at Seeking Alpha for Super Micro SMCI. Profitability, Seeking Alpha gives them a D. And you can see those gross profit margins are a little bit low. You see software often 80-90%. In fact, Nvidia is even closer to 80%. But it is a profitable business, bringing in almost $205,000 net income per employee TTM. And the growth has been amazing, an A+ on Seeking Alpha. Forward revenue growth shown here at 65.71%. The valuation is where it's going to get a little bit tricky. Now, I like to look at the GAAP PE ratio. The forward is a 40.18. That is expensive, but 65% growth, a company like this can grow into itself very quickly. The question always is, what does that cycle look like? Same with Nvidia and several other of these names. If you believe this cycle is going to continue, like Bank of America came out this morning and said it's going to continue through 2026 or middle of 2026, there's a lot of runway for a company like Super Micro. And these PEG ratios are solid, 0.72 and 0.79. So again, the stock is growing into itself very quickly. Of course, it has to continue to deliver on earnings, or you could see that stock sell off. So Super Micro's trade at $900 a share right now. It's up 215% year to date. It's always hard to chase, but you can see the stock has been consolidating in a range most of 2024. Over the past year, the stock is up 233%. Over the past 5 years, 4,749%. And this does look like a bull flag kind of setup. You know, think of a rubber band. You continue to wrap that around and it coils. Eventually it's going to snap. It has to go one direction. The market stays bullish, that direction's probably up. Let's look at a chart. So the 200-day moving average is closer to like $608. This S3 Fibonacci support 3, $585.40. You can see the R3 is up here at $1131, and this stock was $1,229. So absolutely ripped from, if you look at this consolidated for a long, long time, ripped up to $1,229 and did pull back. So it got to $671 here, back to $1,000, down to $741, and it's popped up a little bit again since that recent low. It's at $900 a share. Assuming it holds this trend here, it is above the 50 and the 100-day moving average, and it could go higher from here. Again, a lot of this is going to depend on macro, inflation, Jerome Powell, earnings, and so on. But looking at the chart, it certainly can go lower. If the market stays bullish, it is a nice setup, and you could see this stock back over $1,000 a share. In fact, I think it's possible you could even have new all-time highs by the end of this year or early 2025, maybe something like $1,250 or $1,300 a share. I went to Berkshire Hathaway's annual meeting in Omaha early this year in May, and it was an amazing experience, and I plan to go back again next year. You might be surprised at just how many businesses Berkshire Hathaway owns. Every time I take my kids to Dairy Queen to get an ice cream cone, they remind me that Uncle Warren Buffett owns Dairy Queen. Geico Insurance. Every time you see that lizard on your screen, that's Berkshire Hathaway. If you didn't know, it actually stands for Government Employees Insurance Company. Helzberg Diamonds. You probably didn't know that. Justin Boots, Flying J Pilot. Do you think of gas stations and truck stops? Everything from insurance to homes to shoes. Brooks, for example. Berkshire Hathaway is a very diversified company, and really I think of it as an ETF for everything non-tech. Of course, when you look at the publicly traded stock portfolio, Apple's going to be a big position in there. Buffett considers Apple to be more of a consumer product good. People can't live without their iPhones. Generally speaking, Buffett doesn't invest in technology, and Apple's kind of the exception. If you look at outside of Apple, the majority of what's owned by Berkshire Hathaway is going to be outside of the land of technology. So it is a great way to diversify a portfolio, especially if you invest heavily in tech. Of course, if you're a big dog, you can buy the A shares, about $620,000 per share. Bruh. For me personally, I think I'll go with the B shares, about $412 a share. Now, this is an $889 billion market cap, so just under that $1 trillion club. Year to date, stock is up 13.62%. Over the past year, up 20.73%. And over the past 5 years, Berkshire Hathaway is up 92.35%. Profitability on Seeking Alpha is an A+. Now that gross profit margin is 25.6%, but it makes sense. It's not a software company. It's not a tech company. And it is bringing in $185,000 net income per employee TTM. I like that statistic. It's not a reason to buy or sell a stock. It's just interesting. The growth, not a huge grower here, although 16.55% year-over-year revenue growth is strong. It is showing a 4.72% forward revenue growth. Valuation-wise, it's trading at about a 21 PE ratio. Of course, it does not pay a dividend. And just one quick thing to bring up. Hurricane season seems unusually bad this year, and that could impact insurance providers, including Berkshire Hathaway. This would be a stock, if it pulled back significantly, I'd love to buy shares in my portfolio. And BRK has been running like a tech stock. It's been absolutely on fire. Got up to $430 here, and you can see it's consolidated nicely. Again, it's kind of like that rubber band. You coil it tighter and tighter. Eventually, it's got to snap one direction. Now, I'd love to see this stock come down to something like the 200-day moving average, $383. The trend line closer to 375. That's probably not going to happen unless the greater market sells off. You do have this S3 just under $400 at 395. It's trading right now at $411. I would like to buy this stock under $400 and start a small position and just dollar cost averaged into it periodically. This next stock doesn't only benefit from AI, but really when you think about the secular growth trends on your screen, digital transformation, streaming, remote work, Internet of Things, what they call cloudification. The strategy for Arista Networks is really client to cloud and AI networking. So you can see on Seeking Alpha, 4.94 out of 5, that is a strong buy. Now, I want to remind you that just because this quant rating says that it's a strong buy, it doesn't mean you should just go run out and buy the stock. The profitability is an A+, 62.94% gross profit margin. This is much more attractive than a couple of the names on this list, and bringing in $568,000 net income per employee, which is very solid. Growth here, we got 25%, forward revenue growth over 21%. Valuation, again, where it gets a little bit tricky, a D, and you can see that forward gap PE ratio is just under a 50 at 49.35. Now, the PEG gap is a 1.04, so this is another one of those that's growing very quickly, and the question is, can they continue to keep up with this growth? And if you look at metrics like price to sales, it is pretty expensive at 18.97. Year to date, the stock is up about 55% over the last year, 132% over the past 5 years, 447%. So a reminder, guys, that several of these names have ripped very hard. You have to be very careful chasing. Let's look at a chart, see where the stock could be headed. And you can see on the previous chart day here in orange, I said, same as last time, expensive, probably goes higher. Just kind of keep keeps on climbing higher. It did have a nice pullback here, $240. This is back in April of 2024. That would have been a good buying opportunity in hindsight, of course. Looking at it now, it's just above this R2. These are Fibonacci's here. You do have an R3 that's a little bit higher, closer to $400. The 100-day moving average, $295. The 50 is closer to $315. Would I buy the stock right here, right now? I personally would wait for a pullback. With that said, if the market stays bullish, stocks like this probably continue to go higher. They're very much in fashion. They're part of that AI train. And as long as earnings deliver, the stocks will probably go higher, but you have to be very careful chasing. All right, this next stock is going to be a complete 180-degree turn from the last one we just looked at. A reminder that this list is the top 5 S&P 500 stocks to buy according to Seeking Alpha, and it's using the quant rating. So you can see Wells Fargo, WFC, is rated a 4.95 out of 5, a strong buy on Seeking Alpha's quant rating. Now, I'm not going to spend much time on this one. It's a bank. It doesn't have a lot of growth. You generally want to look at price to book, and this is trading at a 1.22 forward price to book. What's interesting about that is SOFI at $6.30 is actually trading at a lower price to book, a 1.15. And SOFI has 22% forward revenue growth versus 3%. You can see it had a big consolidation period. This is really going back to May of 2022, and it traded in a range between $35 and $48 for months and months. And then it popped up here to $62. It's trading at 60 bucks a share. To me, I wouldn't pay this for Wells Fargo. The 5th stock on the list, this is really interesting. I've never covered this before. This is talking about, even though Godaddy has a $3 billion in net debt, the strategic initiatives and product innovations position it well for future growth, trading at about 15x forward free cash flow. I was very surprised to see profitability as an A+ on Seeking Alpha. The quant ratings of 4.93 out of 5. And I was really shocked by this number too, $280,000 net income per employee TTM. Now, there's not a whole lot of growth here. In fact, the forward revenue growth is under 6%, 5.95%. But overall, these growth metrics are solid around a B. Valuation's where it gets really interesting because the gap forward P ratio is at 22.06. Now, according to this, the PEG non-gap forward is a 1.47 on Seeking Alpha. Price to sales is about 4.83. Now, here's the thing with those ratings. A lot of times it's going to ride momentum, and I generally don't like to buy when those ratings are at 5. You can see here this stock consolidated in this $70 range for quite some time and ripped up basically 100% gain. Just back in October of 2023, this stock was $71 a share. So you're way above the moving averages here. You're getting close to an R3 for the current R3. And I wouldn't buy this stock personally. It's not something I'm even interested in, but it is the 5th one on the list today. Appreciate you watching. Make sure you subscribe, like, and comment. Have a great day.